right, everybody, welcome back to another episode of Inside the Deal Room. I'm your host, Gabe Bowling, and in today's episode, I have an incredible guest speaker all the way down from New Jersey, came all the way down to Tampa, Florida. Some of you guys might already know him. Very good friend of mine, somebody that I trust, developed trust with over the last couple of years, owns $70 million of deals. We're going to talk about it. Chris Stout, welcome to the office.
Thank you welcome to the office. I like that.
The office. Yes.
Yeah, thanks for having me.
So I think let's just catch everybody up. Some people might already know your story.
Let's do it.
They might already follow you and stuff.
Yeah.
For everybody that doesn't, why don't we just start big numbers? Why do you catch so many people's attention? What are you working on today? And then we'll kind of peel it back and figure out how you got there.
I guess the attention is from just doing it for such a long period of time. Like, we're not a group that's decided when this is the greatest thing in the world to do in 2021 that we're going to start then. So this has been going on for a long time now, since my mid-20s, when I purchased a two-family house, and I thought that one deal, two-family house, was going to be my retirement nest egg, and I couldn't wait to pay the loan off on that.
Yeah.
So 15 or 16 years later, we actually purchased that house before this guy in the studio, my son Aiden, came along with us, was even born. His sister was just born when I purchased my first rental. So, we've had this stuff for a long period of time, and we've been in the game for a long period of time, so we amped up. And I started all the way at the bottom from running, two families completely by myself, renovating them by myself. My own hands. My mother would come and sit and bring coffee until 1, 2 in the morning while I'm hanging drywall. So, that started from there. Started managing my own tenants from the very beginning. And then, now we're here. So being able to, the words coming out of my mouth are true experience.
Yeah.
They're not, watching the internet and YouTube for 4 hours a day for 3 weeks, and then all of a sudden, we're just spewing stuff that we just heard from others. Like, this is real stuff.
Yeah. Well, thank you for sharing. So today, Stout Capital, I know a lot of it's personal stuff that you built over the last 10 years. Over the last 4 or 5 years or so, you've started to bring in some of the investors that you already had relationships with, and your graph has gone through the roof. What are you guys at for today of total number of units or assets under management, and then where in the country do you own today?
Yeah, so we're over 700 apartments. I missed the exact number because it's constantly changing. Yep. It's about 70 or over 70 million bucks worth of stuff. What's important to me is that we continually acquire, and we continually do deals, and we're continually in the middle of some form of action. So sitting still isn't really good for me. We've continued acquiring over the past 2 years when no one was buying.
Yep.
My accountant, actually, who's an institutional level accountant, when I call him and bitch to him that there's no deals going on, he's like, dude, your group is actually the busiest out there, so you should stop complaining. But, to me, in my head, I'm always like, I'm sitting still. Like, why am I not moving anywhere? But I guess that's why we keep moving. We've purchased a good amount of stuff over the last 2 years when no one else is buying, specifically smaller deals, actually.
And where at in the country? I know you have 300 in Fayetteville,
Yep.
North Carolina.
So we bought from one family three deals in a row in North Carolina, Fayetteville, North Carolina.
Yep.
We're actually discussing disposing of those right now.
Really?
Yeah.
It seems like it literally just happened.
It does, dude.
Hey, we just closed this, I think it was 60 units that you started with, and it's like, I got another 240 to follow.
Yep.
And now it's like, all right, we're getting BOVs done and talking about exiting.
Yeah.
Insane how fast this stuff happens.
You know what really triggers it? When you set milestones. So when you open a deal, there's certain things that you run into, right? So one of them is going to be expiration of something on the loan. So for us, it's expiration of IO.
Yep.
So 2 years, IO. The loan's still good for another 3 years.
IO means?
Interest only.
Interest only.
Yeah, so when you get a loan on a multifamily property, so if you're doing commercial real estate, it's important to know that you're not just looking at the rate. So when you buy a house, everyone's getting the same 30-year loan, and you just want to get the best rate. All right, so if I could save a quarter of a point on my 30-year loan, that's how you look at it as a residential buyer.
Yeah.
But in commercial, it's significantly deeper than that. You actually look at the rate. The rate is not at the top of the list. The terms are at the top of the list. So what happens over the course of the ownership of the deal? So those deals, the interest only expires after 2 years.
Got it.
So we don't look to pay our loans down.
Yep.
We paid our loan down with the down payment. So we go in, we buy a deal, we put 35% down. That was us paying it down. and then we want the bank to hold everything else for as long as they possibly would without charging us any principal, because we want to make the money now.
Yeah, and the principal pay down really doesn't affect, because you're a value add investor. You go in, you're looking to force the value. You're increasing value by like 30 or 40% of whatever you bought it at.
That's right.
You're not necessarily factoring, oh, well, now it's principal pay down, and we get to pay it down by like an inch every year that we're in it. For you, it's like, what are we buying? What can we do to it? And then the equity that you're building in that 2 to 3 year period of time.
That's right. So we're not looking to build equity by paying down.
Yeah.
We're looking to build equity by forcing value.
Yeah.
So the quicker we're able to force value by paying the bank as little as possible, the most amount of money we'll make, which we're here to make money.
Yeah, very cool. So we're going to talk about deals.
Yeah.
Especially today. Well, the last 2 years it's been extremely tough, and you've been one of the most talked about, most seen guy actually doing deals. So it's very impressive, at least from my eyes.
That's
Maybe
cool.
I just watch you all the time.
Yeah.
So we'll talk about deals last 2 years, and then moving forward, crystal ball, what's actually happening. But before we do that, for everybody thinking, because think about, people are starting their year 1, their year 2, or maybe they're in single family looking to transition into multifamily because they see the benefits of it. How did you get started in the business? And then maybe think about the ideal listener thinking, okay, I want to break into multifamily. You got in 15 years ago. What should they be looking to do today? And then maybe what should they not be looking to do, like syndicating a $100 million deal?
Yeah, so if you're not 100,000% sure that you could handle a $100 million deal, that means you cannot handle a $100 million deal.
Yeah.
So, I see a lot of people go into some groups out there, and within 15 minutes of doing nothing, they all of a sudden passing around $90 million deals saying that they got on an email with a broker. Complete waste of time. Something I always loved about Gabe's group is he pushes, if you're just getting started, take a look at this 10 unit. And if you go back to when I started, a 10 unit was like, that guy is ready to retire.
Yeah.
Like, you do not have to start big. So if you are just getting started, look at the small deals, 2, 3, 4, 5 units. You will learn so much. And it doesn't take a long time to get to the point where you're able to buy significantly larger.
Yeah, because most people stay in that, they're staying in 4 units or less for like 10 years, and then something happens to them, and they're like, okay, I stayed in this thing for too long, now let's go ahead and scale. It's start here, and then maybe look at a 10 unit the next deal, or maybe the 12 unit the next deal, and then maybe a 24 the next one. You don't have to stay in this single 2 to 4 unit for like 10 years. I see a lot of people make that mistake.
I did that.
Yeah. What do you mean by that?
So I stayed in the sub 10 unit category for 10 years. That was my time.
Yeah.
I didn't think the others were possible. And actually, I didn't realize, I started raising capital from my development company.
Yeah.
So we were building homes and I was raising capital to do that. But I never, for some reason, it never clicked in my head that I could do that with apartments. And as simple as that may sound to everyone who's listening, I had a goal, and every room that I walked into, I was a successful young guy. And I was like, oh, I'm on the right track. I'm just going to keep doing what I'm doing. And I never realized that I could be bringing in people into the apartments, and it just never dawned on me.
Yeah, and if you had that piece of information, in year 2 or year 3, and you were able to take action on it then versus year 10, it'd be a completely different
different game.
Yeah.
So that's where all the juice lies. So it doesn't lie in being able to take down your first 60, 80, 90, 100 unit deal, first deal.
Yep.
It's just knowing that, okay, I have to get started, but there's a very good, clear path to where I want to go. That's where it all lives, is right there.
Yeah, because with the exception of the people that do the first deal and lose a lot of money, maybe they're misinformed, they do a bad deal they shouldn't have gotten into. But let's say they do an okay deal for their first one. How many times have you ran into people that said, I got into real estate and I did a good deal and that was it, I stopped? Probably none. Like, they keep going and doing the next deal and the next deal and the next deal and the next deal.
Yeah.
The part is getting started.
So really, the hard part is getting started, absolutely. Yeah. And if you never get to the point where, I think you and I, there's definitely a certain amount of, that we take for granted that we could raise capital.
Yeah.
There's a lot of people out there that can't they just haven't built their life properly to be able to raise capital.
Yeah.
You have to build your life very specifically to raise capital, whether you knew it or not.
Yeah.
What's behind you is, sure, there's, people who recover from bad things, but whether knowing it or not, you have to strategically execute your life to be able to raise capital.
Yeah.
And it really goes back to how you treated people for the past 20 years, like legit. Because, people are writing checks for hundreds of thousands of dollars.
Yep.
And it has nothing to do with the deal. Like, I went out to eat with an investor last night, and he was talking about a bunch of things, and I'm like, I don't know if this is good or not, but I do this. Sometimes I'll interrupt the conversation. I'm like, guys, just so you know, like, if I'm no good, this is no good.
Yeah.
Like, nothing matters.
Yeah.
So you could look at this spectacular deal. Oh my gosh, this Class A deal on the water in Tampa, and it's the most beautiful deal ever. If the guys running it suck, the deal sucks.
Yeah.
So you have to form that
trust
like over such a long period of time. And I forgot where that question started, but if you want to remind me, I get off track. But
it's okay. We're weaving.
Yeah,
we're weaving in and out.
Right. As long as you get back to the beginning, like Trump, right?
No, so I want to keep it. Let's go back high level.
Yeah.
What were you doing for the first 10 years, just so people can think like, okay, how are you making money?
Oh, so we were talking about what do people usually get one deal and stop?
Yes.
Okay, so a lot of people, this is how that would happen.
Yeah.
You save up every single dollar you have and you buy your first 2 family. Yeah. I actually do know a lot of people who have done that.
Interesting.
Yeah, and it's because they did not do it 100% properly, and it was nothing but a nightmare for them, and they said, I'm just going to do something else.
Yeah.
I'll keep this 2 family, like in Brooklyn. In New York City, probably more than here. I don't know very small real estate outside of where I live, but New York City, you would get a 1, 2, or 3 family in Staten Island, Brooklyn, Queens, or Manhattan, right? A lot of people have got into that space. It was a very difficult time in their life.
Yep.
And then they got it to work. They said, I don't ever want to go through that again.
Yeah.
And it's because they actually never took the steps to learn management, hiring contractors. It's okay to go, when you buy something, you go a little bit underwater for a minute because you have to do the things.
Yep.
You have to get the bad tenants out, put good tenants in, do the work that's required, do all the stuff. So you get your head beat in a little bit, and especially the first one because you have to learn. And then when the dust settles and you're like cruising along, it's kind of like people who have one kid.
Yeah.
Like if you don't you have to be able to forget about how terrible it was the first year or the first 6 months. If you don't forget about how terrible it was the first 6 months, you'll never have another kid.
Yeah.
And some people fall into that trap.
Interesting. So if you have a good experience and you learn the stuff and you're like you get into this growth mindset of like, okay, I want to do it more. Those people don't ever stop. Like, will you ever stop buying real estate deals?
Never.
Okay, cool. But the people that go through it and have a bad experience and just don't get either the right information or maybe they bought a bad deal, those are the people that like, I don't want to ever do this again. And then if they do continue to invest in real estate, it's through investing with guys like you or me passively as an LP.
I actually have a lot of people who are in my investor circle. There's a lot of people who are in real estate.
Yep.
That's actually my largest investors.
Really?
They were in real estate for a certain period of time, and they're like, I'm done, bro. I'm done with the calls. I'm done with the stuff that's just not going right.
Yep.
I understand. The reason that those are the best investors for us is because they're like, no, I know real estate's a good thing. I get it.
Yep.
I get the tax benefits. I get that. Like the guy last night that I went out to eat with, the investor, he's like, how many times have you lost? And this guy, he's investing $200,000. He's like, how many times have you lost, say, like someone's 100,000? And I'm like, lost 100? Are you nuts?
Yeah.
Like this game is, if it's done properly, it's not losing 100,000. We're not losing the money. The worst that happens is we don't hit our target in the right period of time.
Yeah.
But if something's not going right, the solution is just wait a little longer.
Yeah. So instead of a 20, you hit a 14.
Yeah.
Instead of a 18, you hit a 16.
Right.
Yeah.
If I told you, Gabe, I got the best stock in the world, bro. It's going to do 20% this year. Yep. And at the end of the year, it does 12. Yep. You're like, all right.
Yeah. Still up 12.
Fine. Yeah. I mean, 12. Yeah. That's great. People are so used to like investing, like there's a great possibility you lose money.
Yeah.
And real estate, fortunately, real estate bought in the right spot, because if it's in a bad market, it doesn't matter.
Yep.
bought in the right spot, handled by the right people. It's not if you're going to win or lose, it's how much will you win.
Yeah. Over what period of time?
Over what period of time, right.
Yeah. That's the functionality of the business.
That's
that
right.
We're in. It's not like car washes. It's a operational business versus we're just leasing space.
That's right.
To people. It's a
Right.
supply and demand thing. All right, so let's fast forward through the 10 years in a fairly quick period of time. What are you doing for the first 10 years? Because it's very, like people, I think with the invention of social media, nobody ever wants to do anything for 10 years.
Right.
They want to do it like right now, the second. What are you doing through this period of time for active income, and then the formula, I guess, that you were using to create the wealth for yourself? Just make as much money, dump it in the real estate. Make as much money, dump it in real estate. Can you talk about that? Because I think it's important for people to see.
You know, it's a very surreal thing to actually. This will sound so kind of silly, but the other day I was sitting at my kitchen sink, filling up my cup of water. We have the filter next to it. Yeah. And my kitchen sink has this 10-foot. It has this 10-foot wide by 9-foot tall window overlooking the river in New Jersey. And it just happened right before I left for Florida. And these things pop in your head, and I'm like, what did it take to get here? Like, holy shit. Yeah. Like, you start thinking back at like all the things you've did. And you hear online constantly, like, no one's willing to do the work. And then, once in a while you're doing the work, it doesn't feel like you're doing the work. You're like,
your head's down, you just don't.
Yeah, and I'm like,
focused.
You almost feel like you're not doing the work. You're like, I'm not doing enough.
Yeah.
And then you look back, and it was constant. I will keep grinding as hard as I possibly can to make that active income as much as I can and dump it into real estate without letting the lifestyle creep hit me.
What do you mean by that?
So I have some pretty wealthy friends, and I have some pretty friends that look very wealthy but aren't. And I'll go to events where there's $3, $4, $5 million cars.
Yep.
Love these events.
Yep.
You have a Lamborghini. We have on Gabe's table over there. He has the Lamborghini book, and at his event he brought it. These cars are just unreal. Anyway, you show up to these events, and there's $1 million+ cars, or call it $500,000 to $1 million cars, and a lot of them. Some people, we say, how much money do you need to buy an $800,000, $700,000 Lamborghini? Some people, the answer is $700,000. Sorry, some people, the answer is $100,000 down payment. Like, I need $100,000, and I'm going to get that car. Yeah. And some people is, I need $10 million before I spend $500,000 on a car.
Earning $600 to $700,000 a year, passive, not even touching the principal.
That's right.
The investment income pays for the stupid stuff.
That's right.
Yeah.
So in your life, when you decide to start to make that switch will determine your acceleration over time. So the longer you could delay, for me it was, arguably the only thing I have that's very valuable is my personal house. Yeah. Which still to me isn't.
And you built that.
I built it.
Yeah.
Yeah. I was breaking my wife's chops the other day. I'm like, you're in your third custom built house. Your butt has never touched a tub that someone else has used. Funny. But so I build my own homes that I live in. Yeah. Third one. And we've made good money on every single one of them.
I was just about to say that acts almost as more of an asset than it does a liability.
Yeah, $500,000 tax exemption, tax-free money. You can't beat it. That's like the biggest, and it's not the biggest hack in real estate. It's a pretty big one, though.
Yeah.
Be able to carry that house. It goes up $400,000 or $500,000 in value. You just get that check. Yeah. Like, no one taking a dollar from you.
I hope you guys are listening. All right, we could talk about this forever. So, at what point, what happens for you to go from the $10 million, you built the entire portfolio with only your money, and you're here. Most people are chilling on their boat, not doing anything because they've made it. And over the last 4 years, I've seen you go from 10 to 70. That doesn't happen accidentally. What happened, either people you met, information you got, what happened for that to transpire?
What actually really happened was I realized that my current business, which was building custom homes, wasn't as scalable as I'd like it to be. And I started thinking what I really wanted out of my life. And I asked that to a lot of people, what do you really want out of your life? Yeah. And what I was doing wasn't going to get me there. So I look back at my $10 million worth of real estate that it took me 10 years to build, and I'm like, this is not going fast enough.
Yeah.
Like, I do not want to. Have you ever gotten in a Lambo? Dude.
I need to.
What?
Do I need to?
Well, you absolutely need to.
Okay.
And what it will show you is, even at your age, you're like, this shit is hard to get into.
Yeah.
Physically.
Yeah.
You're like, you can't wait until you're 60 to get a Lambo.
Yeah.
You won't be able to get out, or you'll make a disaster out of yourself. You won't bring it to a restaurant because you look like an idiot getting out of it. So it's not going fast enough for me, and I have to get to the point where I could buy one of these things and still look sophisticated and classy by getting in and out of it. You almost have to crawl into or fall into it. So I realized stuff wasn't going fast enough. So then it forced me, like, what should I be doing to accelerate what I currently got going on, and not go from like real estate to I'm going to own a chain of hair salons.
Completely different.
Yeah.
Whatever you're doing, how can I make maybe a change, maybe a different vehicle within real estate? And you obviously did that.
That's right.
Using your skill set. So walk us through first couple of deals. I think it was that 60-unit deal where you're not doing it alone. You go out, you're raising money from investors. I think you find out that you already had tens of millions of dollars in your phone book just waiting for you to ask it. Can you
talk a
little bit about that?
That's where you want to start raising capital. You're like, I don't know where to start. It's right in your cell phone book.
Yeah.
Like, don't ever delete your contacts, ever. And you know what I started doing? There's a program, Sales Message, and I know there's a bunch of them out there. It's basically a program where you could upload your contacts.
Yep.
Because, I mean, you could start going to your phone book and just start texting people. Simple and free, right? Always the best way to start. You could upload your contacts. I'm going to pull that back for a second. The best way to do it is just start texting people just directly. Yeah. Then you could scale up a little bit. You could start inputting it into a software that will blast text people. But you have to first, step one is say, I don't care what anyone thinks, because 90% of that blast is going to say, look at this idiot. Who's going to write this guy a check, right? But the 10% is like, oh, this guy's been good for a long time.
Yeah.
Like, I've watched this guy. I've wanted to be a part of, without even telling you, because humans naturally want to be around other successful people.
Yep.
If you're doing cool shit, whether I say it or not, you pull up in an awesome car or you have $10 million worth of real estate, saying it or not, I want to know what you got going on. Yeah. And I want to be a part of it, especially if what I have going on is less.
Yeah.
So people will raise their eyebrow. You don't have to. You don't care about what the whatever percentage it is that doesn't care what you have going on. Yep. Thanks. And that's where your capital raising starts. I want to make sure we covered like what you were asking, the 0 to 10, because I know that's an important topic. Did I hit everything you wanted to hit on that?
So you started. So you get into. How do you? So do you just jump into construction? Because I know that's been your.
Oh, I jumped in head first.
Okay.
Yeah. So construction was, I started with a marketeer ad.
Yeah.
Marketeer ad. I had no tools. My first job, I can remember it. Someone needed a cabinet door fixed.
Yeah.
And I show up and I'm like, $300.
Yeah.
And they're like, okay, deal. I actually had, that required some very, very minor tools, like I'm talking like a screw gun, and like that's basically it. Yeah. Fixed it, then next job, and they grew basically a marketeer ad all the way up to kitchens and baths. Now you do kitchens and baths. Now you could do a whole first floor. You go a whole first floor. Now you get your GC license. What I did, I got my general contractor's license in New York City. And then I was able to do an addition on a home, small addition, like a mudroom.
Interesting.
You walk in, small little mudroom addition, small. Like you walk, that's it, just coats, a door and coat rack. Then you blast some pictures of that out, and all of a sudden you could do a kitchen addition, then a second floor, and now you could do custom homes.
Interesting.
So that's how that business took. And I went all in for 10 years. Every single dollar I made went into real estate. So that's like the important, people want to know, like, how did you grow it? It was focus, and I'm not putting my money anywhere else. Yeah. Like, it's just going into real estate, and every deal I did was, all I have to do is save another $100,000. So for me, the marker was $100,000. The first $100,000 I saved, bought a first 2-family, then I saved, and my goal was buy one house a year with $100,000 saved. Keep it going. Yeah. But now that you start doing that, like I was saying, like, you don't have to go. It doesn't take too long to accelerate, as long as you know where you're headed.
Yeah.
So now you could start selling or refinancing these deals, and that's when the speed kind of picks up on its own.
Yep. The graphs typically look something like this for a long period of time, and then it goes up, and then it skyrockets.
And that's the mind shift is what happens right there.
Yeah. I think it's important that you mentioned you were all the way in, because a lot of people like to dip their toe in, try it out for 90 days. If it doesn't work, they'll move on to the next thing.
Yeah, I don't know if you curse on this podcast or not, but it's all the fuck in. Like, you go as hard as you possibly can, and you do not stop. And it's the only way it happens. I feel like Gary Vee right now.
Yeah. Well,
like there's only one way.
People have gotten soft on social media.
Yeah.
They don't love to scream it. But all right. So I think that was good for the first 10 years. Most people like, they see it and they're like, okay, I'm going to take his 10-year thing and compress it down to like 3 months. I'll go work at a construction job and then I'll go syndicate deals. The period of time where you go from 10 to now 70. Let's kind of move into the deal side of it. What are you doing at like year 9 or 10? Is it 50-unit deals or 60-unit deals? And is it you're doing the same thing, now you're just inviting new people in? Or do you change the model and say, I'm going to go towards these bigger apartment complexes, let me see if I can actually do this thing?
The start of it was a 16-unit with my own money. So it went from 2 to 3s to I'm taking down a 16-unit deal. And 16-unit deal is where I learned all the juice.
Yeah.
If you know how to operate a 16-unit, like a 2 or 3 unit will get you to kind of be able to handle a 16-unit. But a 16-unit is very difficult to manage.
Where was that at?
That's in Staten Island.
Yeah.
It's very difficult to manage that. And it's a rent control building. So not only do you have the tenants to deal with, but you have the
regulations,
horrific regulations that come with it in New York City. So you're balancing that too. So if you can manage a 15 or 16-unit building, you could literally manage anything.
Yeah.
Because it's too small to just hire a manager and let it go. And it's too big, or you work extremely hard to make sure that it stays on just you managing it. So with that education is when I was like, okay, I'm ready to shoot it up. How do we shoot this up?
What is a great deal for Chris Stout and Stout Capital? Like, you're making this change, okay, I'm going to go bigger. How do you define what a great deal is for you?
A great deal is...
Is it more about the deal, or is it more about like a investment thesis of what you're trying to accomplish for the investors? Like buy money or buy an apartment complex, force the value, refinance, and then send the investors money back so we can create wealth over a long period of time? Or is it, I need to hit a 15 IRR so I can do this and blah, 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 blah?
Yeah, so the number one thing about a good deal is you have to make sure you're in a good market, the right market. And the reason that's important to know is, as we turn into 2024 to 2025, a lot more deals are going to start coming on the market. As more deals come on the market, there's going to be more of an opportunity to buy deals that look okay and look nice, but they're in a bad market. Yep. And what's going to happen is you're going to start seeing people buy deals in bad markets, and when the market makes a shift in the other direction again, like it typically does, meaning goes back up because commercial real estate's been pressed down for 2 or 3 years, you're going to be left in the dust because you didn't buy in the right market. So it's very important for us, because really typically the returns on real estate at surface level aren't like, oh my God, these are the greatest returns ever, right? Yeah. You want to make sure you catch the swings correctly. Yeah. So sure, we go to the typical 15 IRR, we want to double the money in 5 years, like that whole thing. But really what we want to do is we want to buy in a great market on the right part of the swing to make sure that when we go to exit this deal, the market is in a better place than when we found it. Yeah. And other things happen that we didn't predict. That's kind of what we're looking for. So we're looking for deals that could potentially have effects and pressures on it in the upward direction outside of what we originally expected. Yeah. Things went better than we planned.
Let's dig deeper, because I know this is happening in a market that you've entered, the Arkansas market.
Yes.
Let's quantify what you actually meant by that statement.
Yeah, so specifically, I could say a market that we're in now, we're buying heavily, like I'll invest every last dollar I've ever made in my life here, Northwest Arkansas. Okay. So it basically goes from Fayetteville, Arkansas to Bentonville, Arkansas. And then people, like, they message me online, like, what about XYZ, Arkansas and Little Rock? Yeah. No. Yeah. Do not. Like, I am not saying that any other part of Arkansas is good except this one sliver of land. Yeah. It's only about, I don't know the exact dimensions, but it's probably about 10 miles wide, and I just know by how long it takes me to get from the bottom to the top, it's probably 30 miles long.
Yeah.
This one sliver of land getting dumped on by the Walton family. And what's happening is billionaires cannot build 100 to 300 unit multifamily building and feel like they did anything.
Yep.
It's probably more trouble than it's worth for them.
Yeah.
But they can build an area or a neighborhood.
Yeah.
And these areas and neighborhoods to get going, because if you think about any other area throughout the country that isn't going, and I'm holding up quotations for anyone who's not watching the video, for any area that's not going yet, it takes a tremendous amount of capital injection to get that area to turn the corner.
Yep.
So, areas that are kind of just chugging along, $150,000, $200,000 homes, the rents are $1 a square foot, not too many jobs going there. Like, to make that area make the flip,
Yep.
and actually start building an infrastructure to handle new, and people want to go there, and then the jobs start going, and like start this dust ball of what's the right word? This dust ball of action.
Yep.
It's very difficult. So that's why if you fly from New York to California, you're flying over farm the entire time, and there's an occasional city that you see.
Yeah.
So what's happening in Northwest Arkansas is the Walton family is injecting billions and billions of dollars. Walmart is injecting billions of dollars. They're the largest employer in the world. They are the richest family in the world. Individually, they are the top richest people in the world.
Yeah.
This area is set for explosion for many reasons, that being the top one. John Gray from Blackstone was there the other day running on LinkedIn saying, if you haven't been here, you got to check it out. And if Blackstone enters the market, forget it. Like, game over.
Yeah.
So it's almost like get your hands on anything you can get on there now.
Yeah, and it's already in action too, because you're able to go there, see it, and I think you were there before the campus was fully built, and then you were there as it was being built, and you saw it come to life. You didn't underwrite in your projections Walton family to inject billions of dollars of development, inviting hundreds of thousands of people in, and new jobs and all this stuff, and more rent for us. You just wrote it like a normal deal, and this is like
so that's exactly right.
That lucky thing.
That's exactly right.
Yeah.
So if nothing comes true, that facts are all pointing in the direction that I said.
Yep.
If none of that happens, the deal will perform as we said.
Yeah.
That's it. So, if you, like I said earlier, if I told you this deal's going to do this and it does that, you're like, it did exactly like you said. Great.
Yeah.
But the goal is to get into what does a great deal look like for Chris?
Yeah.
Is get into a deal that I could say something's going to happen, and if it happens, fine.
Yeah.
Meaning if it goes the way I said, fine. But if this external force pushes us up, then we really hit the jackpot.
I think that's important, because a lot of realtors and brokers try to sell this whole thing about there's talks about a potential development potentially happening,
terrible.
Potentially here.
Yeah.
So you should buy in now, get in early enough. Like, there's got to be a mark for you. It's like, all right, this amount of action's already taken place, and I have indicators that it could keep going, so we're going to underwrite it here. Worst case scenario, it performs here, and if we get lucky,
that's the biggest lesson.
Yeah.
That's the big. You know how many times I've heard like, "Oh, this mayor got elected in this town. He's going to turn around." The mayor has no input. He could be. Have you ever heard a politician jump into office and say, "I'm going to be terrible.
Yeah.
We're not going to do anything"?
Yeah.
Every mayor or any politician that gets elected says they're going to be the greatest mayor ever this town has ever seen.
Yeah.
So you've seen too much of people jumping on board of something that may possibly happen because one or two people said so. No.
Yep.
People say like, how do I buy? And if you're from New York or the area, Bushwick, Brooklyn, or Williamsburg, Brooklyn. It's the parts of Williamsburg is right outside of Manhattan. So you could go there 20 years ago. You would walk out with your clothes off, like they would have robbed you of everything. Now you can't buy a square inch of the place.
Yeah.
So people are like, I want to buy the next Bushwick, Brooklyn. Yeah. No, you do not. You do not want to buy that spot. You do not want to buy the next Newark, New Jersey, because the funny thing about Newark is it's still like stuck in the mud, but like the tire's starting to grab the edge of the rock to get it out. But really, the funny part is my brother's 16 years older than me. He laughs. He's like, dude, my boss, he worked for a home building company when he was younger. He's like, my bosses, when I was in my late teens and I was sweeping homes, were talking about buying in Newark and it's about to turn. You do not want to be the guy who jumped into a place that's a complete shithole and it makes the turn.
Yeah.
Because it only looks pretty when it's finished.
Yeah.
And it could be finished after your dad bought it, he died, passed it to you, and then it turned. Your dad never got to see it.
Yep.
You want to get into an area that's already made the ride up.
Yep.
And then you jump in.
Steve Schwarzman, you know me, I studied.
Love that guy.
Very. He says, be okay missing the first 5 to 10% of the people that go in and get the bigger scores.
Yeah.
And you'll ride the last 10 to 100%.
Yeah. And the number could even be bigger than that, like 50 to 100.
Yeah.
Like you want that ramp up to happen already.
Yeah.
Like people are still making, New York City it's in a tough spot, but you can go to Manhattan and make a ton of money.
Yeah.
And it's obviously one of the hottest real estate markets in the country.
Yeah. Cool. So, all right, let's move into, you said, actually, before we go into the future, what defines a great market for you? You say great markets, location's the number one most important thing, which I get pitch deals every single day from a bunch of people in their year one, and they know the underwriting inside and out. But they know nothing about location, and it's on the corner of the worst city and the worst block. And even like Tampa, people will say, I have a great deal in Tampa. I'm like, okay, what street in Tampa? Because
right.
the street matters, and
right.
it's a mile-to-mile thing.
Right.
It's either growing or dying, and we need to know which side we're on.
Right.
So what, in your eyes, are like metrics or things that you're looking for in a market?
Right. You can't take 3% rent growth, put it in your spreadsheet for anywhere in the country.
Yeah.
That's what people do. But really, it's, for me, the number one thing I look at, if someone says an area, I go on Google. And the reason I'll talk about, we use obviously more sophisticated software, we'll go CoStar and all this, but really all the information that we get on these sites is readily available elsewhere with a little bit more work, right? Yeah. So anyone listening, like if you don't have these softwares, like I'll tell you, anything that comes out of my mouth is a freeway.
Yeah.
So the freeway is you go on Google, you type in, really, you're right, in Tampa it's street by street, but you type in a market and say population.
Yep.
And you want to see what's been going on in a population the last 10 years.
Yep.
So not post-COVID or pre-COVID specifically, but just over the last 10 years.
Yeah.
And usually if people are headed somewhere, it's headed in a good direction. Because people go places that typically have low crime and high jobs.
Yep.
If they could go, and people move for money.
Yep.
Right? So some people, South Florida being a small exception just because it's so beautiful on the coast, people just go there that already have the money. But you want to look for population movement because people are looking, typically families are looking to better their family,
yeah.
right? Or people in charge of a family are trying to better their family. So they're going to move to an area that they think is the best for their family. Mm-hmm. And if a large amount of people are doing that, there's a good chance that they think that there's a good chance that it is. If population's declining in an area, there's a great chance that it's not the best place to live. Yeah. Crime is headed in the wrong direction. Yep. Jobs are not growing. Companies are not infusing money. And this is where you could get a little political and say, that's why it's so important in this country to make sure that companies are incentivized to grow.
Yep.
And you want to make sure that companies are able to spend money on the right things. And sometimes the wrong thing for companies to spend money on are taxes. So if the companies are, instead of able to spend money on taxes, they're able to spend money on, growing an area or adding another 1 million square feet to their warehouse building or XYZ, build that next office building they have to build, then, people head to a certain direction. Yeah. And some reasons really depend on the way the state votes. Yep. Why people do things. But we want to see growth, and we want to see how much money is behind that growth. Yeah. And that's the biggest enter a new market thing. And the reason it's good to talk about this is if you guys are looking to enter real estate, so we're not looking to enter real estate. We're in real estate already. So now we're looking to expand real estate. But if you're looking to enter real estate, the best place to invest, no matter where you live or within, is what some will say 2, I say an hour of your house.
Yeah. Let me get my car. Let me go see it.
Yes.
Touch it, feel it.
No question about it.
Yeah.
And until you've owned and managed that real estate for a long enough period of a time, you won't be able to leave your area because you won't understand that block by block actually
And
matters.
most of the time, there's enough inventory in your backyard to hit whatever financial goals you have. Like you don't need to go out to another market to be able to get to the place you want to go.
Unless you live in, which I was actually like sheltered to this stuff. Like you've seen these small towns in the middle of the country.
a couple of times. I
Oh
question.
my gosh.
So a question: have you ever like gone back? And this is just general curiosity now. I'm kind of a nerd with ChatGPT.
Yep.
And I've been studying a lot of things like currency, money, the creation of money, and the gold standard, all that stuff. Have you ever studied like the growth of cities and like from the minute that Tampa was founded at like 1910 and like all the real estate was built here, and then like as they got into the 1940s they just went this way? It's like, have you ever studied the market and like the growth of it so you can see this is exactly where the hottest part of the town is, right here? All the new money, all the new development's going right here, not over here. Because I've done that now with Tampa, and it's become like if you just look at it, it will tell you exactly where to go, where the best spots are.
I haven't, and that's super interesting.
Yeah, that's a little.
And you do it
a little
through
too much chat. Yeah,
It's through chat.
Yeah.
Wow.
We've named him Chad, my wife and I. Chad.
Who's chat?
Chad. Chat GTP. Chat is so hard to pronounce. I just call him Chad.
GPT.
Yeah.
Yeah.
The AI.
Yeah.
AI. I've done everything, like deals, research. Steve Schwarzman. I know like everything about the guy from his book. I take surface level comment, and I hear it. Hey, Chad. Let's go into chapter 1. He states this. What does he mean about that? He told me about an Edgecombe deal. Let's go study this Edgecombe deal. How was it financed? When they bought it? What type of debt did they put on it? What went wrong? And so it's like I go deep whenever I choose to study something.
Yeah.
And most of the time, that's where like all the gold is.
Wow. That's cool. I'm going to look into that.
I'm a freak. Our entire staff uses AI.
Yeah.
If they bring me something and it's like, if I'm one search away, I'm like, guys, we didn't try that hard. Let's go down the rabbit hole. Let's use AI.
That is great.
Yeah.
Yeah, that's what you just heard from him. Like data and understanding. That's where all the money's made.
That's where you get certainty too. That's why like Blackstone, they don't even, like for me, I have to go to other apartment complexes and see what rents are. They just pull up their portfolio. Oh, we own this building. Okay, here are the rents. Yeah, the deal works. Good. So it's the more data that you have, the more confident that you can be.
Yeah.
Certainty behind it. All right, let's move into the future. 1 year out, 2025. What is, from the real estate side, what are you doing? Because I think it's evident more activity will happen. Rates come down, a couple rate cuts. Treasuries are at 470. I like that. I made a post on my story earlier. People call me crazy because I think today's the perfect time to buy. Do you agree that today's a really good time to buy?
I think it's a superb time to buy.
Okay, my reasoning is insurance is high in Florida.
Love it.
I think insurance is cyclical. I think things will go down.
I love that people say don't buy because insurance is high.
I know.
Like
well, it dings, like if you're an owner of the property and you're selling and I'm a buyer, it dings your T12 NOI,
That's right.
mine. I just underwrite it to $2,700.
If the insurance doubles again, I would buy even more.
Yeah, me too.
Yeah.
So insurance is high, rates are high, and like okay, great, values are down. I want that. Bad headlines. Supply, that's a real issue. What are you starting a bunch of projects throughout 22 and 23 if you're a developer, or your pencils down? You built a lot 2020, 21, which is what everybody sees today, 1 million units online over the next 24 months. Okay, great. How many development starts happened in 22 and 23, and even through 24?
We're looking at, so I'm building right now.
Yep.
You know, and I'll tell you what, like just separately, building is superb for content.
Really?
Oh my gosh. Like if you, and I don't know, Alicia said she saw it, but check my Instagram out. Look at like the last 15 posts, like almost 1 million views on a bunch of them.
That's insane.
It is so good for content because it's so visual.
Yeah.
And I try to make, we try to make like everything we just spoke about in this podcast, we try to make it interesting for Instagram, and you guys on Instagram just don't care.
Yeah, they don't.
No one wants to get rich. Like everyone just wants to look at shit and comment. And I'm like, all right, yeah, if that's what you guys want to do, let's do it.
Yeah.
And actually, I find that a little juice is when you're talking about something in building, if something is subjective, it is the best content ever. Like
you get the comments below.
Oh man, like we had a part where I know we'll get right back to develop in a second, but I walked around the house. I was walking around one house, which my team is so good. Like I only go to because one, it's fun, and two, because content.
Yeah.
I looked up and I'm like, that plumber cut out that entire joist to put that toilet there. So really, it could trigger. Everything's my fault, right?
Yeah.
But then really the framer should have known
Yep.
that a toilet's going there because all toilets go in the exact same place. It's on the plans. But so talking about that the plumber cut out a joist and it's the plumber's fault and he's got to pay for it, forget it. Like the amount of comments are, it's your fault.
Yep.
It's the framer's fault. And then just if you could put something online that could be contrary to what you're saying a little bit and everyone has an opinion, it skyrockets. So you guys are going to be seeing more development stuff on my Instagram. But the largest focus for me is not development. Development takes too long and is too risky compared to other things that we're doing. Finding things that could, and I could give you a couple examples. Find a thing that you could do something to and now it's worth more. Take something that's already existing, it could get something done to it, whether it be management or work, and then exit. And something we're on deal 3 about is we're buying large batches of townhomes, parceling them out individually through a condo regime or whatever the state requires. Every state's a little different. And then selling them off individually. So we're basically taking something that's a rental facility of some sort, we're making it purchasable by someone who wants something 13-ish, 100 square feet, and we exit on a retail side. So now we'll make almost developer returns without doing any development. Another thing that we just found is we found an old corner piece in Northwest Arkansas that was an old car dealer. If we install 2 walls down the middle, it is perfect for 3 storefronts. Like that stuff, that is the best.
Interesting.
Because you're waiting no time for approvals. Because it's zoned what you need. Everything's done. No foundation digging, no soil testing, nothing. We're going into this building and we're altering this building as it sits a little bit by putting in a couple walls. Put a couple walls, do some electric work, sure, the electrical inspector comes in and we're done, out. So that kind of real estate to me today is the best way to make money. Although developing 1 and 2 family homes today should be a very good business. My brother actually sent me a post. I think Patrick Bet David was the author of the post on X. He just sent to me today that the amount of homes being developed in 1970, there was 500,000 1,400 square foot or less homes being developed a year in the United States. Right now, there's only 50,000 1,400 square feet or less homes being built in the country. So really, with that data, building small houses should be very good going into the future.
Very interesting.
But then it comes down to what market you're in. But
very cool. Thank you for going deep on that stuff. All right. 2025.
Feel free to interrupt me at any time. If the alarm's going off in your head,
no, it's good. No, it's good. It's good.
Just go like this.
No, I want you to go as deep as possible because nobody ever goes deep. They just make a statement, sounds really good, and everybody's like, I wish Gabe would have asked this thing so we could have actually learned something and taken away. So I could try to go out and apply it and do it myself.
I saw Joe Rogan. It was interesting on his podcast. He's obviously a very good podcast. He asked Trump 3 times because he wasn't answering it. And I wanted to know the answer to it. When you become president and you show up to the White House on day 1, I need to know what that's like. And he kept, he was going off into the Lincoln bedroom is unreal.
He's weaving.
But I mean, I don't know why you wouldn't answer that. But he wasn't giving us the answer that we wanted. I still need to know when you become president and you show up, you'd wake. So the first day is obviously a bunch of ceremonies and everything. Day 2, we should say, you wake. All right, so you're in the White House. You wake up. What does that day look like?
So, all right, 2020. So Trump winning is a good thing for real estate.
Yes? Of course.
Okay, great. So
he's a real estate guy, bottom line.
That should do well for the purpose of this. So 2025, what are you doing? Because it sounds like you didn't really stop doing anything like a lot of people did. They slowed down acquisitions. What are you doing from the Stout Capital side?
I don't know if that was a mistake or not, by the way.
No, do you think it was?
I don't know.
How many deals did you acquire between March of 2022 is the first rate hike hit, and we've pretty much been in limbo since. It got to a point. And
probably 6.
6 deals?
Yeah.
How are you happy with all of them?
Yeah, they're good. They're good deals. What I could say during that period of time, we were doing a lot of head ramming.
Yeah. What do you mean by that? What is head? What is?
Imagine just running full speed into a wall without putting your arms out.
Okay.
Just ramming your head into a wall.
Saying yes to a lot.
No, just ramming your head against the wall, like showing up to work every day, working all day, and then being like, I don't think anything happened today. Like doing a lot of that.
I know what you mean.
Yeah. So what was my time best used? Doing the deals that we did.
Yeah.
Alternatively, like, could we have been focusing on something else in real estate during that time, like knowing that the market would be locked up? That the jury's out on the answer to that. Like, I can't say like I totally made the best decision by acquiring deals over the last 2 years.
Yeah.
I mean, time will tell, but I honestly think the time could have been spent better doing something else. Like,
what would you have done?
What would I have done? That's a great question. Maybe push a little bit more into education. A little bit more of like...
So does this stem from you knowing what type of opportunity or how active the market will be in 25? And maybe, because I'm going through a similar thing of like, shit, it's going to happen. Like, deals are going to trade. And we can raise a certain amount of money right now. What if I would have taken all the time that we spent the first, we did $30 million deals this year and 2 events. And fired a bunch of people, hired a bunch of people. It's been fun. Like, we've been stretched.
Yeah.
What would have happened if we said no to everything that we said yes to prepare for what's coming in 25 and 26? I go through that all the time.
So I could comfort you a little bit and say, I think you were definitely doing the right thing.
Yeah.
Because you're building, I'm on your podcast now.
Yeah.
You're building a beast behind the scenes.
Yeah.
So I look at what I did, and I'm like, sure, I got a bunch of deals done. In hindsight, like, will it be good when we exit? Sure. Now you build some really good investors. Like, I did get that ball continued to move. Yep. Could I have done other things that would have produced more and been better for the future during that period of time? I always look back at construction too. Like, should we have shifted a little bit towards maybe some kind of real estate service instead of being actually the acquisition guys, like provide some service, whatever it might have been, fix and flip loans or one of the trillion services on the real estate. So, and again, I'm not sure how we got here, but me acquiring good real estate over the past couple of years, I'm not entirely sure if that was the best use of time, to be completely honest. Like, I like being open and what's going on in my head. And
we will find out. Obviously, the deals are good. That's the baseline. You did good deals.
We're significantly better than people who did bad deals before us.
Yeah.
Now, the deals are great. There's no complaint about the deals. It's the time, the time that I spent. But we learned such a tremendous amount. Yeah. There's a lot of value in seeing the market go someplace. Because we did go 2 NMHC conferences where we met the brokers in person. And they were like, we're doing a ton of BOVs, broker's opinion of value. That's like, when you want to sell a piece of commercial real estate, you do a BOV. You basically go to the broker, you hand them all your financials, and the broker will say, this is what our opinion is that it's worth. Yep. So it's not an appraisal, it's just what the brokers think it'll go out the door at. Very detailed. They actually do a very good job. The big groups, especially if you're serious, they do a great job. So the brokers at NMHC, National Multifamily Housing Council, meetings, they were in Vegas. We would go, and they were like, December or January, the new year, we're doing a ton of BOVs. At the end of the year, as soon as the year breaks, there's going to be a ton of deals in the market. Yep. So we listened, and we're like, great, let's keep looking and keep in these guys' pockets and all that. We've done 2 years of that so far.
Yeah. I was just going to say that NMHC was probably late 22. Everybody, first rate hike hits. Everybody's like, when does this stop? They started to cool down on rates. The Fed came out and said, okay, we're done. They weren't done, but we're done for now. We're just going to listen to the data. And then brokers are like, okay, it's about to get very active again. I remember everybody's, hey, get ready. Yeah. And then January turns around and SVB collapses.
Yeah.
We just face a bunch of new stuff. Never happens. Interesting.
Yeah.
So, okay.
So when is it going to break?
Yeah.
We still don't know the answer to that.
Yeah. And there's been 2 declines in rates.
Right. It still hasn't broke.
Yeah. When do you think it does?
I don't know. You know what? Because if you would have asked me any time over the last 2 years, my answer would be wrong.
Like everybody, even myself, when's the first rate cut? As soon as the first rate cut happens, it's going to light on fire.
Right.
There's been 2.
Yeah.
Treasury's gone up from 350 to 470. My interest rates were at mid 5s to low 6s last month. They're at mid 6s, low 7s today. There's been 2 rate cuts. So what are you focused on?
The problem is real estate owners are too cool, man.
Yeah.
No one panics.
Yeah.
Everyone's like, yeah, man. It's almost you're dealing with like large real estate owners are like California surfers. They're like, yeah, man, whatever. Like, nah, I'm good. I don't want to sell.
Yeah.
Like, you talk to guys worth $50, $80, $100 million personal net worth, and they're like, yeah, I don't know, I'm good.
Yeah, the cash flow.
Like, you're
nice.
good. What do you... And then you talk to them, you're like, yeah, I completely agree with you.
Yeah. Yeah.
Damn, you sure you don't want to sell?
Yeah.
Just so a young guy like me could make the money you were supposed to?
So what are you focused on in 25? And I kind of want to break it in two parts. With the deal side of it, what are you focused on? Because it sounds like you're doing a lot. It's great deals only. And then the whole social media side. Why are you doing this thing and bringing your son down to Tampa to see your... Because I was like, I never got to go and see my dad do podcasts. It was kind of like, it's an interesting thing. So I want to kind of hit on both topics. From the deal side of it, just so everybody can see what you're doing actively, and then we'll wrap up with kind of some personal Chris stuff.
Yeah, so what was the first part?
Deal side. What's like, okay, it's Monday. How many deals you got in your pipeline? Do you have offers going out? Are you super active? Like what?
Super active,
Yep.
looking for sub $5 million deals at the moment.
Okay.
And sub 5, so basically, and I learned this term at your event, adult flipping. So we're focusing strictly on adult flipping at the moment.
I will coin that, by
Yeah.
the way. I don't
Is that
think
yours?
Well, I call it adult flipping.
Okay.
And nobody else is pushing it.
Yeah,
So,
we're doing adult flipping.
cool.
So we're doing I'm sorry. Yeah, we're doing a lot, man. Like,
Yeah.
we're closing on a shopping strip. We're closing on a strip center. Where are we? The middle of November. We're closing on a strip center at the beginning of December.
Yeah.
We're buying a bunch of townhouses to isolate. I'm building 8 houses in New York, in Staten Island, so we'll be exiting those in 25.
Yeah.
So we got the townhouse isolation. We have the acquisitions, the acquisition of the longer term hold stuff, which is right now is we just acquired an industrial piece under the same fund. We're closing that strip center, exiting the development stuff. If development stuff falls on my lap, completely falls on my lap, I will do it.
Yeah.
Am I looking for it? No. I'm focused more on that middle stuff. So that's what's going on today. Right this second, do I have that big monster goal of acquiring, 100,000 apartments? That goal is shelved for a moment.
Yeah.
And I probably should. Personally, I do have to reanalyze my goals. I know that's on my list of things to do. You have to constantly shift because, well, it just hasn't been a great time to be doing that. It's a juggle that you have to set goals and you have to constantly work with them.
Yep.
It's a difficult thing to do.
My goals in 21 would have been much different than my goals today.
Yeah, like I know you're huge on this stuff. Like, what's your goal today?
We want to do 20, well, I think in 12 months, and then I think big term.
Yeah.
So big term, we want to be bigger than Grant.
Yeah.
And the machine that we're creating. We want to be the largest person online for multifamily internet apartments. Short term, we want to raise $25 million next year.
Got it.
Yeah, 12-month goal, $2 million a month, 200 phone calls, inbound booked on our calendar with people that know who we are. We have the IR. So that's our short term. $25 million of equity raised. Partner with, I showed my goals with you.
Literally. You didn't.
That's my fault. I take full responsibility.
I was waiting for that.
That's my fault. Instagram.
Yeah, you said I'm sending this to you.
Yeah,
you're in it, and then I
blame Mark Zuckerberg.
I actually haven't slept since that day.
So
I've been waiting
you
for that
are
to come
in my goals.
Awesome.
I was like, here we want to do $100 million deals.
Yeah.
I don't really care. It's 75 to 125 because I can do half the equity with you. I can partner with different people. We can take on the whole deal and do it ourselves. We want to raise $25 million and place it into the best possible deals, period. Whether it's with operators like you that I trust, which today is like 1 out of 1, which is you, and then do the deals here in Tampa, Orlando, Daytona. That is our thing. I get very lost in year 2, 3, 4. Like I have this big thing. I know where we're going long term, and then I know that the next phase of our life is going to be cranking out this $25 million. Everything, like the deal room training, the circle community, the free, the 97, everything that you've seen us doing, and I've kind of shared a lot with you too about behind the scenes stuff. It's all around this $25 million. What are we doing to raise $25 million a year next year? $2 million a month. That's how I think with goals.
$2 million a month is that's a good target.
That's 200 people.
Yeah.
And At 100 grand. No, that's 20 people.
20 people.
Yeah.
20 people, 100 grand.
Yeah. 20 million a month would be 200 people.
Right.
Yeah.
Right, total.
Yeah. That say yes. So we got to go through a lot of people.
Yes.
That say no.
Right. That's 20 yeses a month.
Yes.
Yeah.
So that's how we're setting up our goals, and we make.
They are there.
We make some very uncomfortable decisions, Alicia and I. Alicia does a whole lot more than she actually gets credit for. We make very tough decisions around the goals that we set. So it's like we could get very comfortable. Oh, we like this person. They're our friends. We knew them from when we worked at Cardone Capital, but it's not the best fit for the company for where the company's goals is going.
Right.
So we've learned a tremendous amount through mistakes on our end, and then hiring bad people. It's like we fucked up and we make those mistakes. But we always come back, Alicia and I said, it's like, where are we going? What are we doing?
Hiring bad people, you have to go through that.
You have to, because you're not big enough where you have enough of the payroll to afford the people that you actually want.
Right.
So you have to deal with this first or second or third batch of people to get it off the ground. It's a very uncomfortable thing. And nobody ever talks about that. But the last...
We could do a whole podcast on like starting a business and hiring
the last
people.
3 years since leaving Grant's office, it's been psych. It's crazy. I sent this video to Alicia. Have you ever watched the movie Troy?
No.
Okay, you need to.
Okay.
I'll send you the 7-minute video. I shared it with the entire team. It's just Achilles. It's basically a war. You just go around killing people.
Nice.
Business is psychological warfare, at least in my head.
Yes.
And I mentioned this on the stage last time you came up to me. Hey, it's okay. Like, you need to, like, we all go through this stuff.
Yeah.
Nobody ever talks about it. It's psychological warfare.
Oh,
building a business, whether it's construction or the apartments thing or raising a bunch of money.
The CEO of NVIDIA said that on stage recently. He says,
really?
Yeah, someone asked him, like, I forget how he got to the answer, but he was like, if I would have known what it would have taken to get to this point. Yeah. Because people look at, like, the CEO of NVIDIA and be like, it would be awesome to be him or Elon Musk or any of these guys. And he's like, if I would have known the steps it would have taken to get to this point, I would not have started this company.
Yeah.
And, like, that is
because you're on
powerful.
This path. Like, what's the alternative? You commit to this, like, whenever Alicia and I quit, all right, we're quitting, making $200 grand a year, working for a billionaire. Arguably, like, if we just stick in it for another 10 years, we'll be pretty wealthy.
Were you working for, Alicia, you working for Grant too?
No, it's everything we do is, what? Oh, yeah, she was making...
Oh, he said when we were working for Grant, but I figured it was everything's weird.
Everything
forgot that about you guys.
Well, I've rewired the way that my brain works with that. It does not really work that well. We quit, I'm like, man... This is going to be big feat, but like we made that commitment, and so beyond that point, you have no other option to just continue to go forward.
Yeah.
Like, you don't have the option to quit. And so whenever you make that level of a commitment, you put yourself in this, you put your back up against the wall, and it's like there is nothing that will come across me. There's no thing that will pop up that's like, man, I'm going to have a tough conversation with this person. I just told him 2 months ago that we're going to try to create a career out of him. It's like, doesn't really work, so we got to let you go. I'm like, dude, that's a tough conversation to have. And you develop and you become such a better person over that period of time.
Oh, man. So valuable. Yeah.
So, all right. I'm getting lost now.
You just wanted to hit the personal thing.
Yeah, so
we could.
Why are you doing this? Like, you don't need to at all. Like, even the pathway that you were on was fine. I'm sure it was good. Like, I'm sure life wasn't horrible for you.
No.
So
arguably my mid-30s were my best years looking back.
Yeah. So why do you put yourself through what you've gone through over not only like the last 24 months, but the last 5 years? Yeah,
definitely. You could actually say, why would I have put myself through what I did the past 24 months?
Yeah.
36 months. My mid-30s, were awesome. Just everything was great. Like the cash flow was great, the business was great, everything was great. It was just that thing inside of me that I knew had to be bigger.
Yeah.
And I didn't feel like fully fulfilled.
Interesting.
So the psychological warfare that I've put myself through over the past couple of years, like to grow this bigger thing. Why? I don't know. You know, I could, like, we could go down a rabbit hole here, but my house is like, the house is sick. Like just broadside to the water. It's the boat's in the yard, full. The back of the house is glass. Just
put it up here.
It's really cool. And I could honestly tell you, and I don't know if this is negative or not, but I go there. You know, when I'm in the house, it's just a fucking house.
Yeah.
Like, so why do we do all this stuff? It's just, you know what? We're all wired for something, and you just got to follow that. Because I know if I didn't, I wouldn't feel like I'm hitting what I need to hit. Yeah. So I just want to hit bigger things, like most people that push to the top. Yeah. You know, so that's basically it. And then the little guys along me for the ride, I've learned that if we plan the trip well, we could actually bake in some pretty good fun. Yeah. To jump along. It just so happened that the first leg of this trip was in Orlando. Yeah. So leave a little bit earlier. Right, dude, we had how good was yesterday? Like 1 out of 10? 10. It's awesome. Yeah. So we only worked for like an hour and a half, and that was going out to eat with an investor. So, you know, Grant said something very interesting the other day, something I totally agree, like, bring the kids around the adults. Yeah. If your kid lacks hanging out with other kids, but is hanging out with adults, that's a serious win, man. Yeah. Because the adults are the one with the power. Yeah. My other two, and I think the other two, they're good kids. But any moderately, like anything that you would say take as like a bad habit or a negative, they're getting from their friends. Yeah. So this guy coming along and just, you know, he'll probably think back at this at one point in his life and just remember this time that, you know, we did. And also spending time one-on-one. Like anyone who has more than one kid that's listening, try, because we're a big family thing. Like, I love hanging out with my wife, just like you. Like, I love hanging out with her. But when it's me and her, we're kind of like, get out of here, kids. Like, go do something. That's why we had 3 years, you know. Go play with each other. Go fist fight in the parking lot. It doesn't matter. But hanging out with just one kid at a time, there's a lot of value there. So you kind of cheat, bring him. You got, you know, he thinks he went on a Disney trip. Meanwhile, we're on a work trip. Yeah. And then he gets to watch the podcast, which, you know, hopefully this will stick in his head. He actually wanted to know. He's like, are they recording with just phones or like there's real cameras recording? And I'm like, no, dude, there's real cameras. Yeah. What do you think? Is this a good setup?
Yeah. This has got to be awesome for him to be a part of. Yeah. And then see, especially like in 5 years from now when you have thousands of videos, it's like, you know, the stuff that you wish maybe your parents could have left, like the life lessons they taught you. Yeah. As you were growing up. But instead of it being told to you, like you have an entire library of all of the stuff that you're working on.
Videos don't die. Yeah. It's cool.
Very cool. All right, let's wrap it up. Where can people find you? I think a lot of people, every event that we've ever done, you've always been a guest speaker, and everybody comes up to me and is like, dude, Chris, like he's got it.
Yeah, that's awesome.
So where can people connect with you? What's like the main spot you're sending people?
I like to, I'm most active on Instagram. Yeah. So I could always send you to the website, which is stoutcap.com. Yep. But official Stout on Instagram, that's where the main, if you want to get to me directly, that's where you go. If you want to get to the company, stoutcap.com. Yeah. And I'm open. You know, sometimes your message will get trapped and hidden, and I'm sorry if I'm not ignoring you. I get to a couple days later because we're getting solicited by many bad things that you have to sift through to get to.
Can I set up your email? Can I do all this?
Oh my gosh.
Every single day.
Yeah.
Like, dude.
Hey Chris, really impressed with your content. That first line, I'm like, guys, come up with something different, bro. Like, someone sold the script somewhere and everyone bought it. Yeah, so officialstout.com and stoutcap.com for the company.
Yeah. All right. One thing that you can leave, either a piece of advice, a saying that you heard this morning on Instagram that just gets you freaking lit up. One thing that if anybody I'm sure after an hour and 10 minutes, they took away a lot. One saying or one thing that you'd like to leave everybody that's listening.
I actually texted to a buddy of mine right before I got out of the car because he said something to me that triggered it. The world does not care if you're stuck in the mud, stuck in a rut, stuck in the snow, stuck in anything. The world doesn't care. So just get out of it and do what you got. Do what you know you should be doing because most people know what they should be doing.
Very cool. All right, ladies and gentlemen, hopefully you've enjoyed in another episode of Inside the Deal Room. Chris, thank you so much for coming. We'll see you guys in the next one.